Well, good afternoon, everybody, and welcome to this presentation on brewery financial planning in a pandemic. I want to first thank Andrew for having me on and thank the group for wanting to get this type of content. So I'm excited to present it for you. I'm going to the readers here, as you can tell, because I'm going to be referring to some notes. So what we're going to talk about here today is essentially accelerated planning. Financial planning and budgeting usually takes weeks and months, and it involves a lot of different people. We just don't have that kind of time these days. We're really down to hours and days to create our financial plan. So I want to share with you some tools that you can use that are flexible, they're quick to update, they're easy to read and understand, so that you can communicate your new financial game plan, because stuff is changing obviously daily and weekly. We got to keep on top of that. We need some tools to do so. And we'll dig into cash flow planning as well. Really the premium on having tight controls. Lots of things that we do in our business, from innovation to automation, are critically important at this time, but without cash, we're out of business. And I think maybe best of all, these things that I'm going to share today, they're very important right now because of the pandemic, but these are also fundamental skills, and they're going to benefit you, whether we're in good times and bad, and hopefully good times are around the corner. So quick housekeeping. If you have questions, I'd love to take them. You can put them in the comments area, and I'll do my best to check in on those. If you have a question that's a little longer and you'd rather email me, you can do that. My email is here. It's Kary@beerbusinessfinance.com. If you've got a question that doesn't lend itself to an email, or you just want to talk something through, I'm happy to do that. So if you want to set up a call, email me and we'll find a mutually convenient time to do that. For resources and materials, the spreadsheets that I'm going to reference in this presentation, along with the course deck, will be available. We'll figure out how to get those to you, but if they're in the download section here, or if you don't get a copy and you'd like to shoot me an email, I'll send them off to you. So this is me. My name is Kary Shumway. I'm a CPA, CFO, a numbers guy. I do love the numbers. I spent 15 years as CFO for a beer wholesaler, and I'm currently a partner and CFO for Wormtown Brewery, located in Worcester, Massachusetts. So a lot of things I'm going to talk about here today are things that I've learned over the years, but also things that I'm going through right along with you as a CFO for a brewery, all the stuff that's getting thrown at us. I founded craftbreweryfinancialtraining.com really as a place to share what I've learned and hopefully shorten the learning curve for you so you can create a financially successful brewery. I have a free brewery financial newsletter there, as well as subscriptions to premium training courses. And I've also just created something new. I'm excited to share this with you. It launched just a few weeks ago. This is a new website. The domain is karysfinancialtraining.com. I'm Kary. I do financial training. Figured why not cut to the chase. So what I have here is a brand new brewery financial training program. And at the end of this presentation, I'm just going to give you a quick tour and give you a special offer that you can take a look at, see if it's something that's useful for you. I tend to be a black and white guy. I love spreadsheets, meat and potatoes. This new platform allows me to present the material in a little more palatable way. I can do color and pictures and integrations and a lot of engagement and videos and so forth. So I'm really excited about it. I hope if it's something that's useful for you guys, you can check it out and see if it is something that you'd like to try out. So with the presentation overview today, these are the topics that we're going to talk about. First, cash flow, trackers, cash management techniques, really getting a game plan to aggressively manage our most important asset, which is cash. Next, after that, I'm going to talk about some tools to manage your beer pricing, your costs, and your margins. One thing we're seeing quite a bit of in this pandemic is what we're selling and how we're selling it. We're shifting a lot from draft to package. We're shifting a lot from taproom sales over the bar to go beer. And the changes in what we're selling and how we're selling it can have a very significant impact on our margins and our profitability. So I'm going to kind of walk through some tools that you can use to keep an eye on that. Then we'll present how to create a flexible financial model, kind of a 30,000-foot view of quickly creating a new budget for you. And then, as I said, I'll do an overview of the 2021 Brewery Financial Training Program and all the details that you'd find in there. So I just want to take 1 second, have everybody stare at this word, cash. It is the most important thing. If there's one message, if you don't remember anything else from this presentation, I want you to remember this one thing. It's going to make the biggest difference. Is we want you to be fanatical about your cash flow. Be cash flow fanatics. We want people to be fanatical about our beer. I want you to be fanatical about your cash flow. So we can have great strategic positioning, market share growth, innovation, on and on. But if we boil it all down to one most important thing, it's cash and access to capital. So these tools for financial management, for cash flow management, these are systems to achieve one singular focus, and that is on cash. It's the one thing that's going to keep us in business. So we need to know where our flanks are. We need to know where we may be vulnerable and watch those areas, watch those places where we may be leaking cash. Watch it like a hawk. All right. So what is cash flow? So we know that money is kind of flowing into and out of the business all the time, but we don't know exactly when it's going to go out and in what quantities and when it's going to come in. So we really need good tools to watch this. And in my experience, I don't see a lot of breweries that have a good, solid, active cash flow management plan. We tend to have a strong focus on sales growth, profitability, and then everything else tends to be kind of second. So we really need to start with just an acknowledgement or an understanding of the importance of cash, and then putting the emphasis on having a good cash flow management plan. So keeping track of this, that's what I'm going to share as some tools to do that. But first, I want to just make a distinction between profit and loss and cash flow. When we're looking at the income statement, we are looking at a report that is based on something called accrual accounting. And all that really means is the income statement is measuring transactions. It doesn't care about cash. So if we look at our income statement, we say, well, we have profit. That isn't cash flow. They're two different things. So the income statement is measuring transactions. It's measuring sales when they're earned. It's measuring expenses when we have an obligation to pay them. So we need to look at a cash flow statement in order to kind of dig in on what's actually occurring with cash. This is what a cash flow statement traditionally might look like. I don't see a lot of breweries running something like this on a regular basis. But if you are running one of these, it can be a very useful tool. Essentially what it's trying to tell us is where is the money coming from, where is it going to, and it'll split it into these different buckets. It'll call cash flows from operating activities or investing activities, financing activities, and so forth. So it can provide useful information as to where cash is coming from and where it's going to. And it's also a really good supplement to the income statement and the balance sheet. So as we know, the income statement is telling us about sales, cost of sales, margins, expenses. The balance sheet is showing us the assets and liabilities, what we own, what we owe. But the statement of cash flows, its only job is to talk to us about cash. So these are the three big financial statements, and really how we want to use each of these to measure. But that focus on the cash flow statement is super important. So if you're running a cash flow statement now, and it looks like the one in the previous slide, great, keep doing that. However, one of the challenges with these cash flow statements is they're historical. They're looking backward in time, and that's what each of our financial statements is doing. Is it's essentially a historical look at what's happened. So we need some tools to look forward so that we can forward forecast what's going to happen. So some of the cash flow items that we want to watch, we want to take these pieces and essentially put them together on a cash flow tracker that we can use to look forward, to project, to estimate what's going to happen, so that we know what our financial position will look like down the road. And this is going to give us a measure of control. It's going to give us a measure of uncertainty. There's so much uncertainty out there right now, but there's certain things that we can get our hands around, these cash flow items, these cash flow drivers, and pull them together. So the key cash flow items, the pieces of the puzzle we want to look at are obviously cash on hand. What do we have in the bank? What do we have for access to capital? This is a big deal, the line of credit availability. Something to consider if you haven't already. It's really just a cushion. It's for shortfall, for working capital. We need to look at our accounts receivable. We need to monitor our accounts receivable aging report. Likewise, our accounts payable. We need to understand what we have for upcoming obligations for payroll, upcoming obligations for debt payments, and then pull all this together. And again, the point of this is to have a tool that we can forward forecast. The traditional cash flow statement is great, but it's only telling us what already occurred. It's too late to figure anything out. So we need something that's going to be looking forward and something we can use to monitor on a real-time basis. And if you're like me, well, I'll speak for myself. I don't like surprises, and I definitely don't like surprises relative to cash flow. Surprises are bad. Monitoring these items can help you limit and hopefully eliminate those types of surprises. So this is one example of a cash flow tracker that I like to share. It's very simple. It's straightforward. It's kind of easy to get your hands around. It's easy to update and understand what your cash position looks like. And I present this as a starting point to kind of dip your toes into cash flow management for two reasons. One is these are numbers that are relatively easy to pull together. They generally kind of make some sense from a business standpoint. Yep, I've got AR collections, I've got payables and so forth. And it's pretty quick to update this. And why I call it a daily or weekly cash flow tracker, some folks have asked, why the frequency? Why are we updating? So part of it is to really build that cash flow muscle. So if you're not used to doing it, it's really trying to create a new routine for you to monitor your cash flow. So again, this is a scorecard I like to use. I'll just walk through the details quickly and give you that caveat that this is not a replacement for the full cash flow statement, but it's going to provide a good look at your cash flow items that can have a big impact. So I'll start with what do we have on hand for a cash balance. In this example, we've got $75,000. I want to add in if we have any access to additional capital, for example, a line of credit. So you may have a line of credit with your bank, varying degrees. In this example, it's $150,000. So right now, we know that we've got $225,000 of cash or available access to credit. From there, we're going to add in what our expectations are for collections throughout the course of the next few days or the next week. Again, I'm looking at this on a short time frame. So what is the expected money in? So we're really looking at this from what do we got for money in? What do we have for money out? What are the components of those? So I want to look at what are we going to have for deposits this week? What type of accounts receivable collections? I'm going to estimate I've got $75,000 there. And in a second, I'm going to kind of show you how you can build up that number. Next, I want to look at what is expected money that might be going out. What do we have for payments for accounts payable, payments for debt, payments for payroll? And I want to sum all that up. So when I'm done, I've got a pretty good sense as to what is my cash position right now? What do I expect to have money coming in? And what do I expect for money going out over the next couple of days or next week? And that gives me a projected future cash balance. So I start with $225,000. I'm going to guess over the next week, I'm going to have $200,000. So again, this does a couple of things. One is it's manageable. We can get our hands around it. We're not trying to project out. What I find is that a budget, an annual budget, can be overwhelming because there's so much that's unknown. How am I supposed to project next year, let alone next month? This tracker is not asking us to do that. It's just saying what's going to happen over the next couple of days or the next week. So that's one. It's manageable. We can understand it. Secondly, and it's going to force us to look at these cash flow drivers on a regular basis. So if we're looking at them regularly, we can see problems before they become big problems. So in this case, cash is decreasing about $25,000. That may or may not be a big problem, but I want to know what my trend is looking like relative to my cash position on a regular basis. So again, it's intended to be something you can produce quickly, read quickly, allow you to spot problems such as a cash shortfall, and you can act on the information right away. There's no waiting for that month-end cash flow statement. So again, our cash flow drivers, good cash flow management starts with identifying what your cash flow drivers are and then putting tools in place to monitor them. Now, if you focus on these cash flow drivers, you monitor them and you measure them and you make improvements in these areas, you will improve your cash flow. It's really as simple as that. So these are the five big ones. There are certainly others, but accounts receivable and inventory, accounts payable, and your capital expenses. Capital expenses would be purchases of equipment, fixed assets, things of that nature. And then your operating results, your profit and your loss. As I said, profit and loss is not cash flow, but it certainly does influence that cash flow number, so we need to watch it. I want to dig into a couple of these cash flow drivers and just give you some examples of tools that I use in order to watch them. And the first, and frankly, one of my favorite reports, is the accounts receivable aging report. Why is this my favorite? This is cash sitting out there just waiting to come into the bank account. So I want to know who owes us money and is it overdue or are they within terms? So if we look at this accounts receivable aging report, and if you run this from your system, it's probably going to look something like this. On the left-hand side, you're going to have a list of all your customers, and then you're going to have a listing of what they owe you. And then it's going to be aged out in different buckets. So you can see here 0 to 30 days, 30 to 45 days, and so forth. That's indicating what is the age of the invoice or the invoices from the date of that invoice to the point where we're running this report. Now, in many cases, we're extending credit terms to our customers, maybe 15 days, 30 days, something like this. So we may naturally have some accounts receivable, some uncollected sales. So what I've done here is I'm going to make an assumption we have 30-day credit terms to our retail customers. Now, our retail customers, if you're selling to wholesale, we just substitute that. We would say those are wholesaler customers. We're doing self-distribution. We'd have these retailer listed, and obviously if you have both, you could include both here. So if we're extending credit terms of 0 to 30 days, I've simply color-coded in green to say, not worried about that column, they're within credit terms. Anything in yellow or red, I'm starting to get a little concerned. This is overdue, why is it not collected? And so that we can quickly look at this and say, I've got some money here that I need to go get. So if I'm running this and reviewing it on a regular basis, regular for me is probably once a week. If you've got someone that helps with collections, they can do it more frequently if it's appropriate to do so. But again, this is a big cash flow driver. It's cash that's sitting out there. And a very effective way to get that cash in is to pay attention to it. So we pay attention, somebody's overdue, pick up the phone, make a phone call. We send an email, we resend. There's games that people play. Sometimes people just forget, but we want to resend the invoice, resend the statement, make that phone call, send that email. So there's things that we can do to get this cash in quicker. So that's our accounts receivable aging report, one of my favorites. Likewise, the accounts payable aging report. This is going to list all of the items, all the invoices that we owe to our supplier and vendor partners. So much like accounts receivable, down the left-hand side, we're going to list, it says customer, but it should say vendors and suppliers. Who do we owe money to? How much is it? And what's the due date for each of these? Now, the other thing about these aging reports is they're going to inform that cash flow tracker. So I had said earlier, I want to estimate how much I'm going to collect in a given week from accounts receivable. One way that I can make that estimate is I look at my accounts receivable report, I see what might be coming due, and then I can make some assumptions based on it. I believe we're going to collect this money over the course of the next few days and week. Likewise with accounts payable, this is money that's going to be going out over the next 30 to 60 days. So we can really see in detail what we owe, when it's going to be coming due. The other thing I like to look at on this report is, this is an opportunity to potentially identify vendors and amounts that we may be able to negotiate longer credit terms. For example, if most of our vendors give us about 30 days, we're going to put those in the 30-day bucket. If we can negotiate longer credit terms, maybe vendors are going to give us 60 days or more. That's obviously a way that we can improve our cash flow. We're trying to play this balancing act of not paying our invoices too soon, but not getting overdue with our supplier partners, because we need to maintain good relationships. We're going to need things from them to keep our business clicking along. So again, there's sort of that balancing act. The last thing I use this report for is did we just miss an invoice? So you can see here in this example of vendor number 3, I've got $1,200 that's due, that's over 60 days. It's possible we somehow just missed that invoice. So this is a comprehensive look of all the invoices that come in, when they're due, when they should be paid, and it can tell us a lot of information, including giving us a good estimate as to what we're going to be seeing for money out, for cash flow out relative to this cash flow driver. All right, so those are some starting points for managing your cash flow, for really keeping that laser focus, for becoming cash flow fanatics. Next, I want to turn to beer pricing, cost of goods sold, and margins. And the takeaway here is, clearly during the pandemic, we're seeing big changes in what we're selling and how we're selling it. Our brewery, we're a very draft dominant, on-premise dominant brewery, and that's obviously changed quite a bit. So there's a lot of shifting from draft to package. We have 2 tap rooms. Like many breweries, you sell a lot of beer over the bar. It's a very profitable way to go. Not working out too well when things are being shut down and restricted. So how we're selling things, pints over the bar, not so much. Now we're doing curbside, you're doing growlers, you're doing packaged beer to go. The margin structure and the profitability of what we're selling and how we're selling is we're seeing huge changes there. So we really need some tools, getting back to some fundamentals to really understand our costs, understand our margins, how we're pricing our products, so that we don't have any surprises relative to these changes the pandemic is kind of putting on us. So with that, we look at the income statement. We have sales, cost of goods sold, and our gross margin. Sales really is the aggregate of the price of the beer, right? What we're selling it for. The cost of goods sold is the aggregate of what is the cost of that beer, and the gross margin is the difference between the two. And just to put some numbers to it and to underscore really how margin percentages are calculated, in this example, if we had a hypothetical $30 price for a case of beer, hypothetical cost for that beer of $18, we'd have a $12 margin. We make $12 in margin on that case. In order to compute the margin percentage, we divide those $12 by the sales price of $30, and that gives us a 40% margin. So that's just how the math works. Now that number in and of itself isn't going to mean much. 40% margin, is that good? Is that bad? It really depends on what your operating expenses look like and what you need in order to be profitable and cash flow positive. The components of our cost of goods sold are aggregated into what's called our bill of materials. So you may be familiar with all this. We have 3 buckets of costs: direct labor, direct material, and overhead. And the sum of those is our cost of goods sold. So it's important to understand and revisit the costs for our beer, primarily so that we can make sure we understand what our margins are going to look like. And again, since we're shifting into maybe packaged product that we might not have sold as much of, we really need to understand what we're getting for margin. So it really starts with having our hands around the costs. And that means doing an audit of our bill of materials, looking at our cost of goods, and doing our best to ensure that it's updated, that it's complete, and that it's accurate. This is an example, hypothetical bill of materials for a product. So fully costed bill of materials could look something like this. We've got our categories of cost: direct labor, direct material, overhead, and we're listing each of the individual costs that go into each category, and we're pricing them out. So this is the recipe. We've got some work to do to build these up. If you're using a brewery accounting software right now, you likely have these constructed. So the takeaway here is to go in make sure they're complete and accurate and updated for all of your products. And if you've got a lot of work to do, what I recommend is don't worry about all the products right now, but focus on your top sellers. And you can even do an 80-20 analysis. What have we really sold a lot over the last 3 months, 6 months? And those are the bill of materials that I want to focus on and making sure those are complete and accurate first. So once we get our hands around the cost and understand, we're shifting packages, we really need to understand our cost. Then we can layer in the pricing. We can revisit the pricing, see how we're pricing our beer, whether that's to wholesalers, retailers, to customers, and understand and do some margin analysis. So just some quick pricing terms: PTW, that's price to wholesaler; PTD, price to distributor. Those two essentially are synonymous. PTR, price to retailer; and PTC, price to consumer. So the name of the game is to really understand our brewery margins, our requirements. What do we need to be profitable, to be viable, and understand what the margin requirements are for each stakeholder in the three-tier system. So if we're selling to wholesaler or selling directly to retailer, what margin requirements are they going to need so that they're meeting their financial objectives as well. And the reason we want them to be hitting those is we want them to sell our beer, right? So it's all about everybody's got to make money. So that's an important component, is to understand and make sure that those margins are there for everybody. So I want to talk about a model that you can use to analyze the economics of price and cost, and that you can use to take a look at the financial impact of the changes to what we're selling and how we're selling it. So again, with beer margins, if we want to make sure we've got the brewery, wholesaler, and retailer margins understood, and we want to set some goals on this. The goals being competitive pricing, of course, sustainable margins, and everybody in the three-tier system making money. So this spreadsheet will be available for you to download and play around with. I'm going to go through it fairly quickly, but certainly you can download it, play with the numbers, and hit me with any questions if something comes up that doesn't make sense. This is what I'd like to do for each product within our portfolio, or at a minimum, the products that are our primary sellers. Is I want to list out each product and the package type that we would sell it in. And then I'm going to layer in the costs, the price that we sell it for, and the margins that we're going to see. So in this example, I've got an IPA, and we're going to sell it either in half barrel, 6 barrel, 4-pack 16-ounce cans, 2 12-ounce 12-packs, or 4 12-ounce 6-packs. So you may have bombers or any other package configuration. So whatever you've got, you want to list here, cost it out, and look at the margins. And one thing that you may find, the results will vary, but if you look here, you'll see that for the IPA, the half barrel, the brewery margin, if you go all the way over to the right, is about 53%. And what we're seeing, consumer behavior, is consumers are looking for bigger pack sizes, so they're generally gravitating towards, say, 12 packs. So if we shift to a 12-pack, in this example, you can see our margins are under 20%. So we go north of 50 to under 20. That can obviously have a big impact on profitability. So again, the takeaway is what are we selling? What are the packages that we're selling it in? We want to take our beer costs for each one of these, compare it against the price that we're selling it for, and determine what our margins are. And again, once we've got our hands around that, we've got a decent understanding of, if I'm going to be shifting from draft to package to 12-pack cans, what is that going to do to my financials? So that was kind of the first cut of this, is what am I selling? What are the costs? What do the margins look like to the brewery? Now we want to look at what are those margins going to look like to the wholesaler, to the retailer, and ultimately what is the pricing going to look like on the shelf to the consumer. So with this type of analysis, you want to get some expectations of, well, what does the wholesaler need for margin? If you're selling to them, they've probably already told you that. Generally speaking, they're going to want around 30%. Retailers, generally speaking, they're going to want around 30%. So, and those results will vary. But if you have your your information from your wholesaler and your retailer partners, that's how you can build up this pricing spreadsheet. Now, your prices may already be set, your cost may already be set. It kind of is what it is, but you can at least understand what those margins are for each layer in the 3-tier system. All right, so I did go through that pretty quickly, so I definitely encourage you to check it out. I found it a great tool to have. It just pulls everything together. It might seem a little overwhelming at first, but once you start to play with it, I think you'll love it as much as I do. We'll see. So let's talk next about a financial forecasting model. I'm just going to check. We have one comment here. How do we figure out labor pricing, payroll versus production? And that is from Cindy. Figure out labor pricing, payroll versus production. Well, I mean, typically, well, I'll tell you what we do, and maybe this will answer the question. If not, you can hit me back. Within our payroll system, we've identified what people are working on, right? What job titles. So we have production and packaging. That's going to go to our cost of goods sold. And then we may have administration, sales, and marketing. And that's going to go down to our operating expenses. So we're essentially taking our payroll costs, and depending on what folks' core jobs are, that's how we're allocating it. Now, you may have people that split time between the tap room and maybe the cellar. Or they're brewing part-time and they're doing admin part-time. So here, my first suggestion is I wouldn't worry about it too much. Where is the majority of the time, and let's put it there. If you can come up with an allocation method, like this person does the books, but they're also helping out in brewing, it's about 50-50. You can use your payroll system to allocate the costs. So I hope that answered the question. If not, go ahead and hit me back there. So the financial forecasting model, the stuff I've covered so far, cash flow, cost of goods sold, and so forth, it's fairly granular. We get into the nitty gritty. This would kind of take a 30,000 foot view and show you how to quickly create a new forecast and essentially using a one-page tool. So something that's flexible, simple to use. It's going to have all the goodies on it, all the sales, cost of goods, margins, and so forth. And if you already have a budget, so I recommend starting with that as a baseline so you don't have to create this from scratch. And then you can adjust the information up and down. And this tool is not only useful for management, for ownership, so you can use it as a financial game plan. It's useful for your bank because they may be saying, well, how are you guys doing? You know, what's the rest of the year look like? What's next year look like? Maybe useful for investors if they want to have answers to those same questions. And what I like most about this is it can be a tool to adjust quickly as new information becomes available because it's becoming available on a regular basis. Obviously, I think nowadays we're going to be holding our breath on the next round of the PPP money and applying for that and what is that going to do? What requirements are we going to have relative to payroll and staffing in order to qualify for those loans and for forgiveness? And we want to bake that into our forecasting model. So one of the things, the challenges with traditional budgeting is the budget is essentially obsolete as soon as we make it. And I'm as guilty as this as anyone. You know, I preach starting your budget in mid-October and finishing it in mid-December, and then you've got a good plan for going forward for the new year. And I do believe in most cases that's what I would recommend. However, I also understand that in the fast-paced changes that we're seeing right now, we need to be able to update this thing on a more regular basis. We can't just set it, forget it, create it, and it's done. We're going to need to update this pretty frequently. And I will say we're updating ours on about once a month basis. So within our financial forecasting model, we're going to look at these core pieces. So the spreadsheet I'm going to show you next is going to be a summary of each of these items. We're still going to have a sales forecast. We're still going to have to analyze our margins. We'll have to have an operating expense plan, payroll, lease expenses, insurance, all that regular stuff. We need to list that out and map it out. Capital expenses, are we going to be buying any new things? And if so, where are we going to get the funding for that? And then importantly, what are our debt service requirements? What are we going to need to pay on our bank loans and our debt? So I want to show you this forecasting model in two parts. It really is on one page, but this is sort of the top half and then the second half. So in this top half, what we're looking at here is essentially our summarized income statement. And then on the next screen, I'm going to show some cash flow items that we want to add in. So down the left, we have where we're selling our products. So that may be the wholesale, self-distribution, tap room. Maybe it's just one, maybe it's a combination of these things. So we're going to update our sales forecast for those paths to market. We're going to update our margins based on how those changes are occurring. And for many breweries, the loss of taproom revenue and shifting to maybe a self-distribution or home delivery model, the margin and profitability on that has a radical change. We all know how profitable the taproom is, but it's particularly painful when we lose that and we're shifting to selling our beer through a different method. So we want to update that, include it in our forecast model. Across the top, I'm a big fan of these monthly financials, so I can see what's occurred, I can see trends, I can kind of get this in bite-sized chunks. I can get maybe a really good feel for what's going to happen next month, and then the rest of the year, I'm just doing my best to estimate what it is. So it gives you again a measure of control, a relatively short period of time. So we're going to have January through December. We're going to have a rolling look at what the year is going to look like. So as we start to roll into the new year, we would update this, and above each of the months, I've got either actual or forecast. So as each month concludes, and we've got real numbers, we update the forecast with those actual real numbers. And then the months that are not concluded yet, we'll have those as forecasted across the top. So at any given time, we can kind of see what has occurred, what do we expect is going to occur in the next month and the succeeding months for the remainder of the year. And then we'll have a good annual plan. The bottom half of this forecasting model is going to continue with our income statement projection. So we're going to look at our operating expenses. We're going to look at our net income. We're going to do a quick conversion here to something called EBITDA. That's earnings before interest, taxes, depreciation, and amortization. Your bankers, investors will generally look at this as a form of modified cash flow. So I find it useful to put it on here because the bank may want to see your EBITDA compared to your debt service obligations, so they can understand, what the relative relationship is between those two. Because they look at EBITDA as kind of money in, they look at debt service as money out, and they like to see a certain relationship there between the two. So again, for operating expenses, OpEx, we're gonna make that list of payroll, lease, insurance, everything that goes into running our business. And then we're going to compute our EBITDA. We're going to layer in our debt service. What are our monthly debt payments? And then we're going to come up with our estimated cash flow. Now, just one quick note on debt service. These can change. You may be able to negotiate with your bank. I know early on in the pandemic, banks were open to going to like interest-only type loans. That may or may not happen. But if changes occur, I guess the takeaway is you can update that debt service number relatively quickly and see how it's going to impact your cash flow. So because we just don't know when we're doing forecasting, we're at good times and bad, we're doing our best to make educated guesses, make estimates, gather information from different places. But the bottom line is we just don't know. We're making our best estimate. So I do recommend modeling out different scenarios. Use a best case scenario or worst case scenario, maybe a middle ground possibility. And because it's only one page, it's a relatively quick process to do that. So for example, if you're thinking, I don't know, sales could go down 30%, they could go down 70%. Model it out. Maybe one is best case, one is worst case. Maybe you're in a good position where you're flat or you're increasing. Model those out as well. Find a break-even point, and I recommend having a goal for when you're putting this forecast together. So for example, one goal might be, we just want to be cash flow neutral. I want to create a plan that gets us no worse than cash flow neutral. That's not a bad plan. So have a goal in mind when you're putting these together. So just to kind of wrap those up, it's really just about watching the numbers. It's about building those routines, those cash flow routines. It's doing those fundamentals of looking at your beer costs and your margins. And it's having a tool that like the financial reforecasting model that's flexible that you can update quickly. So we want to monitor, update these tools with new information. As I said, I use that cash flow tool probably not every day, but every third day, and certainly every week. The financial reforecast, we're generally doing an update each month. Sometimes there are minor changes, other times there's wholesale changes. We're looking at sales trends. We're trying to gather information where we can, much like I'm sure you all are, is talking to wholesalers, talking to retailers, consumers, others in the industry. What market trends are we seeing? What legislative changes are going on out there? And it's great to get that information, but it's even better to do something with it, right? To incorporate it into these plans. So I recommend taking that information and baking it into these plans, so you've got really the best projection that you can put together. All right, so as I promised, I want to give you a quick overview of the 2021 Brewery Financial Training Program. So I was doing some quick math on this. I've been in the beer business as a CFO for the past 20 years, at least 40,000 hours. Kind of scary to think about that. But what I've tried to do is I've tried to take those 40,000 hours, what I've learned, what I've done, and really compress them down and put them into this course and distill down what I think is most important for folks to learn. And I've managed to get it into about 8 hours of instructional material. So I put in the 40,000 hours, so you only have 8 to go. And I understand that I think of this as finance for non-financial people. I'm very much interested in giving you information that can make a difference. You use this thing, you will save money. Use this thing, you will improve your margins, things of that nature. I'm not interested in teaching debits and credits, and that's not what this course does. This is really actionable, usable, practical, real life, proven stuff that I've used and have found to be both profitable for our and helping with cash flow in our businesses. So I want to share just a little bit of some of the early feedback that I have from students that are in the course right now, some challenges and goals. And I share these because they may be challenges and goals that you have as well. So one comment was, our biggest challenge is getting raw material inventory right. Supply chain issues these days, canned shortages, sales planning, production planning, uncertainty about what people are going to, what wholesalers are going to order, what the consumer is going to buy. It's a big challenge, no doubt about it. And try to address this in the course by giving you key metrics that you can use, scorecards that you can use relative to your inventory, relative to your production planning, so that you are in a position where you don't have too much inventory, so that you're burning up cash flow, but that you don't have too little, so you're running out. So we talk about key metrics on that. Another comment was, our debt load is what keeps me up at night. And debt can be a scary thing. I've also heard debt can be a great motivator. But the bottom line is you need financial tools to monitor what that debt load looks like. We need to look at ratios within which the bank is going to be happy, within which we're going to be able to repay our debt. So we go into that in some detail in the course. Our biggest challenge is managing labor. For sure, outside of the cost of our beer, payroll is one of the biggest expenses that we have. So we talk about how to budget that, how to schedule out and manage that big expense. As I mentioned earlier, I'm a black and white guy. I like the spreadsheets and this and that, but I do understand not everybody is as crazy about those things as I am. So it's nice to be able to have a platform to present this information with some eye candy. So we got some eye candy here within the course. There's 6 primary modules that I go through. The course includes 40 lessons. It's delivered across 6 modules with a total of 8 hours of instruction. And at the end of each module, there are graded quizzes, and at the conclusion of the course, there's a final exam. So it's helping to try and reinforce the material. So some examples of the modules that I cover: Brewery Finances 101, really just starting with the fundamentals. How do the finances of a brewery work? So we get into that. We talk about the brewery financial statements, really taking a deep dive. What should these look like? What's an income statement look like? What should be in the chart of accounts? What am I looking for on my balance sheet? Why do I even need to look at it? So really kind of getting into those financial tools and why they're useful. I also share the common financial problems that I've seen that can be very expensive, show you how to identify them and how to fix them. And it really just boils down to 3 or 4 things, and they happen over and over and over again. And I would say it's likely that you would have one of these problems in your brewery. We get into more on beer pricing, financial planning and budgeting, and of course, a lot on cash flow. A couple of goals that the current students have that I wanted to share. One was understanding the financials of a production brewery versus a brew pub or a tap room. I think this was a great goal because, again, right now, with tap rooms kind of shutting down or being restricted, or we're just uncertain about the future, we're all becoming production breweries. So we're having to create, new packages of beer, and that the cost structure and economics of a production brewery and a brew pub are entirely different. So we dig into that in terms of how can you do the analysis so you can model out what one type of brewery is going to look like relative to another from a financial perspective. Another comment is to gain more insight into the true financial workings of a brewery. Really digging into finance and accounting is more or less consistent across different businesses, but there are many nuances of the brewery business that need to be accounted for. So digging into what those are, how you can monitor them and measure those. And then lastly, understanding target management metrics. So we dig into what key metrics, what the key metrics are that I watch, how I watch them, how you compute that information, and talking about benchmarks and things of that nature to really help manage a business. So just a couple of benefits, and then I'll wrap this up. The course is no risk, 100% money back guarantee. If you take it and you're like, I didn't really get what I wanted out of this, no questions asked, 100% get your money back. So that is out there first and foremost. I feel that these skills and tools, particularly right now, are very important to learn to really strengthen your finances during the pandemic. This stuff is useful well beyond when we get through this crisis, but right now we really are in survival mode. And I truly believe that the skills and tools that you'll find here can help you navigate that. And it'll help you stay current on all the latest financial planning, implementation, and tracking techniques. So if you want to take a look at the course, you can go to karysfinancialtraining.com or click the link that Andrew has put here in the video, and you'll be able to take advantage of this special offer just for you guys. The regular price of the course is $4.99. You can get it for $3.99, save $100. Use this coupon code. So when you go to checkout, you got to enter that coupon code, CVP offer, and you'll get that discount. And this is good for the next week, so it will expire on January 6th. All right, so that is the overview of the course. I do want to conclude just with a wrap-up of the things that we talked about, and I like to talk about action items. So I can explain these things, and some might sound interesting, some might sound like something you want to try out. Action items are super important, right? So if we don't do anything with the information, we're not going to get any benefit from it. So first of all, the cash flow trackers. I would encourage you to identify what the cash flow drivers are in your brewery. I've listed those 5. You may have others. You may have inventory, maybe a bigger driver than, say, accounts receivable. But identify your cash flow drivers and use that cash flow tracker to monitor that information. Next, dig in on your beer costs, your beer margins. I think now it's more important than ever is to really review those product costs, make sure they're complete and accurate. Try out that pricing model so that you can forecast your margins. Understand your margins on each type of package in which you sell your beer, whether it's half barrels or 12-pack cans. Those margins can be very different. Third, use that flexible financial model so you can quickly update your financial plans. It's a one-pager. It's intended to be something you can update on a regular basis. And lastly, check out the Brewery Financial Training Program. There's a video that gives you an overview. You can also find the full course outline there, so you can see all the details that are included. So I want to thank you for attending today. I want to wish everybody happy holidays, happy new year. Again, if there's questions that come up afterward, don't hesitate to email me, Kary at beerbusinessfinance.com. If you're looking for other resources, you can check out craftbreweryfinancialtraining.com. Again, there's a free newsletter, free tools and resources there. So again, happy new year, everybody, and thank